Yes, sir. It's your boy B Hayes. We back with another one, guys. So let's go ahead and jump right into it. Before we do that, watch out for spam, WhatsApp in the comments down below. Also, join VIP if you would like to do so for entry and exit of my plays. Also, get your free stock down below with Webull and Robinhood, guys. So let's go ahead and jump right into it. So AMC in the overall stock market, the end is near. We is approaching the end of this bearish market, guys. They doing everything they can. They panicking right now because I don't believe they plan work how they expected to work. As far as the COVID plan, all type of plans that they got for us. People is just waking up. People is thinking different. People is becoming entrepreneurs. People making money for themselves. Just like with TikTok, people becoming household names, like own personal brands. You can be doing anything in this world and you can make content on it, whether you cooking, cleaning, working at your job, whatever the hell you doing, blowing up balloons, anything. You can do anything. Put it on TikTok, make a niche behind it, and blow up. That's why exactly one of the reasons they're trying to get rid of it. But anyways, as we know how the retail investors came and stormed into AMC, GME, took over the game. That's why they try to manipulate it, and they did manipulate it, took out the buy button. That's why they did all these things, because people is becoming too powerful. And now we is at the end of this bearish market, and the market is about to be just taking candy from a baby. You know, people gonna be calling out stocks. It's gonna be fairly much. I ain't gonna say easy, because nothing is easy. Nothing that comes easy is even and not even worth having. But when the market is in a bullish market, all I'm saying is people will be calling out stocks, and it's already gonna be doing that, because that's what type of market we're going to be in, a bullish market. So majority of the stocks that be called out is just going to be green, guys. But you still need to have a strategy in the bull market, because even though a bull market is still going to be choppy, it's going to spike and come right back down. So you need to be able to be identifying that support and resistance in order to get in at the best price and sell at the best price. So anyways, let's go ahead and take a look at it, guys, see what's been going on. As we know, this market did come down today after having a positive week on last week. So what's happening? So stocks fall as investors ponder for the Fed's next move. So we know Feds will come out next week and raise interest rates again. Previously, they've been raising interest rates by 3/4 of percentage points, guys. But due to common sense, like I told you guys, just like the market is making a false move right now, unless it's just trying to throw out stuff just so it can go ahead and close this gap. Because I told you guys, we already know Bitcoin could come down to 10K. We know the market could drop 15-20%. That's the only way they'll try to throw out narratives to scare the market so that gap can close. Because other than that, the economy is looking back better. It's not, too crazy, but it's better. Meaning this way is inflation have came down, gas prices drop. Companies have abundance of inventory, so they not taxing people how they was at first. How the car market was sky high, this, that, and third. They not realizing you ain't gonna be able to sell nothing. You raising the prices. I understand inflation is rising, so you gotta raise your prices. But then you had to think like, damn, I gotta drop my prices again, because can't nobody buy it. Ain't nobody got no money to buy it. And they definitely ain't about to buy for this higher price. So now they got so much inventory, they have to drop the prices. Same thing with, all this stuff that's going on. Nike releasing, redropping shoes that supposed to be exclusive. When Nike drop a shoe and it's gone, it's gone. They've been doing restocks and redropping the pounders and all type of stuff, because they in the money shortage. Not a money shortage, they're rich, I know that. But as far as whenever you making $1 billion a month, and then all of a sudden now you only making 100 million, those guys, don't matter how much they got, they still need their numbers to make sense. And that don't make sense for them if their numbers drop like that, which it did. So anyways, we'll go ahead and take a further look at what's going on. The stock market dropped Monday from recent economic data that has cast too much doubt on the Federal Reserve's ability to move toward a pause in interest rate hikes. So the Dow fell 483 points today. The S&P 500 dropped 1.8%. The NASDAQ fell 1.9%. So let's go ahead and take a further look at what's going on, guys. So we know the Fed's meeting is next week and is expected to raise interest rates. I was just telling you guys that by next week, they expect with Powell, because I told you guys it's common sense. We've seen what was coming down. Inflation has came down. And if inflation came down, there ain't no reason for the Feds to continue to be as aggressive as they were in the past, right? It ain't no need for that. If they was to say that, that's how we'll just know without a doubt. They just trying to harm the market, to harm retail investors, right? So he had to come out and say, oh, inflation came down a bit, so we could possibly be less aggressive with hiking interest rates on next month, which is December this month. And they will hike it interest rates by 0.5 percentage point instead of 0.75 percentage point. With that news being disclosed, that would help the market go off go up even harder on the last week and the week before. So as we know, guys, now, like I say, I'm peeping everything. It's hot and cold. They try to hot and cold, hot and cold. Just like before this, before I just said what I said, in the past, a few months ago, they done came out and said, you know, they basically on and off switch, saying they're going to be very aggressive, hiking interest rate. Then they said they're going to be less aggressive. They're going to cool, just hot and cold, to see what type of control that they still have over the market, guys. So as we know, like I told you guys, we basically is in the, like this, like, we basically like right here. You get what I'm saying? We know that we could possibly fall. Bitcoin could come down to 10K. We know the market could fall again. So it's like we won't even be shocked if that happened. But like I told you guys, it may not happen if the feds go ahead and come out and say they're going to be less aggressive with hiking interest rates and tighten balance sheets. They see that inflation may not be a problem going into 2023. They see it's coming down and it's going to stay down. I mean, not, you know, stay down, probably rise back up just a little bit, but it's going to level out and consolidate, or not consolidate, but calibrate, just like the market. It's so choppy right now. Eventually it's going to calibrate. Then we're going to go off into a bullish market, doing the same thing we was doing in this bear market, but the opposite, creating higher highs and higher lows as we continue to climb. So you already know what to do, guys. Add your boy on Instagram at the B Hayes Show. Get in VIP. I love y'all. We out, and God bless you.